Today's Fed announcement is going to be huge, and we're going to talk a little bit about this evening with Matt, the mortgage guy, Matt Gouget, one of the top mortgage professionals in all the Sacramento area. The Sacramento real estate market, as well as the entire nation in general, has been slumping. Real estate market has been slumping. Spring was horrible, summer was horrible, and we're all kind of on that fence waiting for that Fed announcement to happen today. We're thinking interest rates could go down lower. But honestly, guys, if you've seen the last couple of weeks, interest rates have already been dipping. This is going to be interesting. A lot of people thought about packing it in, didn't think interest rates would drop any further, and just figured that towards the end of this year, it would be a very slow real estate market. This could totally change the game. A lot of people have been sitting on the fence. A lot of people have been waiting for their moment to jump into the real estate market. They've just been waiting for lower rates. Well, guys, guess what? Right now you have them, and now it's all about what you're going to do with them. So we're going to talk a little bit about the market. We're going to talk about the Sacramento housing market and how it's going to do after this big announcement. Are we going to see people jump off the fence and jump into the market? Are we going to see people basically say, well, you know what? I'm going to wait for it to get lower. I want home prices to go lower as well too. I'm going to wait. We're going to see what's going to happen because this market is going to get a little bit of a kickstart. And as far as I'm concerned, man, all bets are off if we get close to the 6% or even under 6% interest rates. Let's get going. Let's talk about all this stuff. Like I said, I got my buddy Matt Gouget, Matt the mortgage guy, on the show tonight. We're going to discuss the Sacramento real estate market in general, what this Fed announcement means to the housing market in general. I mean, it's going to be nuts. And we're going to also talk about what we've been seeing over the last 2 weeks in interest rates. I mean, they've been going down and down and down. Let's get into it. All right, guys, welcome to the show. We got Matt the mortgage guy. If you haven't checked out his channel, what do you got, like 3 million subscribers? What do you got now? Matt is a rock star. Matt, how are you doing?
I'm doing great, Mark. Thanks for having me, man. This is fun. I know that you're trying to push me to get back to doing live streams on my channel, and I think I will, dude. I just enjoy it so much. Chatting real estate, chatting mortgage, chatting with people, because like no matter what podcast I go on, like this morning talking to Mike Zuber on his channel, like I'm not a guy who's reading economic data, economic reports. The information that I have and the information that I'm going to share comes from people, real stories, real life in the trenches. Like that's all I do every day is talk to people about real estate, talk to people about ways to structure mortgage. So I'm excited. I'm glad you invited me on Fed Day, right? We're sitting here on September 17th. The Fed lowered the Fed funds rate by 25 basis points. We're going to talk about how that doesn't mean the mortgage rates went down. They actually did the opposite. And you know, what buyers and sellers can expect in Sacramento, in California, across the country, moving forward, because, you know, I'm having conversations with people local, but I'm having conversations with people across the country, to be honest. And it's an interesting time in real estate, my friend.
All right, well, let's talk a little bit about today. I mean, here's what I meant to, and a lot of people are like, Fed announcement, you know, short-term interest rates, long-term. I mean, these are so. Here's the reason why. People have been on the fence. They've been on the fence spring, summer, and they've been on the fence waiting for something to go, right? And so this is the big thing. I've had tons of conversations with tons of people saying we're waiting for this announcement. We're figuring out exactly how the economy's going, what kind of indicator we're going to get. This announcement is basically what we're waiting for. And so at least for me, like it was one of those things I looked at and I said to myself, okay, this is a big one. And not because, I mean, like, here's the thing. You guys have watched the channel. I'm not the biggest like person who's going to tell you that the Fed rate is going to be huge. The world's going to be better and everything too. I actually am the most like pessimistic person when Jerome Powell comes out. I just think it's like much to do about nothing. But I will say for a lot of people, this was that moment that they were like, this is going to be it. Either I pack it in or I'm going to do it. What do you think about that? Is that kind of a fair assessment as far as our market and everything too?
It's whether it's right or wrong. I think it's a fair assessment because I've been doing mortgage for over 12 years. I can't think of a Fed meeting, a Fed announcement that was more marketed, that was more talked about, that I got more questions about than this one, right? September of 2025, for whatever reason, was marked on the calendar. Part of the reason I think there's so much fuss about it is because there's so much pent-up demand. There's so many borrowers that have been on the fence, and affordability's been the sticking point. And they're like, when rates get lower. Here's something to think about, though. If you're a consumer in the market thinking about buying real estate, and it's mid-September 2025. This was the day that you're waiting for. Well, over the last 6 weeks, I just looked, man. The average 30-year fixed rate at the end of July was 6.8%. So between the end of July and the middle of September, we went from 6.8 to 613. 613 was the number that Mortgage News Daily had for the average 30-year fixed rate. Yesterday, spoiler alert, that new number is 622. It's gone up. The Fed cut the Fed funds rate by 25 basis points. Mortgage rates went up. And everyone wants to know why? And I'll tell you the exact reason why mortgage rates went up when the Fed cut the Fed funds rate by 25 basis points. When they cut it by 25 basis points, the market was flat. I'm watching mortgage-backed securities as I'm having a conversation on a podcast earlier today, and they're flat. 11:30, our time in California rolls around, and our buddy Jerome Powell gets behind the microphone. He starts talking, and his talk track is just super dovish, right? Like he's just kind of dancing around, like aggressiveness around future rate cuts. And, we go from thinking the Fed's going to start getting aggressive and cutting rates, 6 rate cuts in the next 6 months. So long story short, after Jerome Powell talked, like the 10-year treasury went from 3.99 or 4 to like 4 point, I think at the end of the day at 4.07. And mortgage rates went up. And so, for those who were under the false assumption that today was a day where mortgage rates were going lower, the last 6 weeks is when mortgage rates went down. Now, September 17th, the cuts behind us, and, where mortgage rates go in the future really is, I wouldn't say anyone's guess. I would guess flat, but some false hope, Mark, that we're going just on this same trajectory we've gone in the last 6 weeks, and you'll see 5.75 6 weeks from now, is a dream, right? It ain't happening.
Yeah.
And I've told a number of people who are on the fence about refinance, it makes sense today. I'm like, if it makes sense today, you lock the loan and you refinance. I've got 22 or 23 refinances in the works right now, and I'm super happy for those who locked. Some of them are going into a 20-year and they're paying same payment or $100 more than they were in their 30-year. Some are going from 7,125 to 599, and they're saving $550 a month. But for every one of those 22 or 23 borrowers, I've got 1 or 2 borrowers that were like, I don't know. I know you say the maths, Matt, and that, the break-even point's 24 months, but I think I'm going to wait. I think I want to go for 5.75. And, for those people, I hate to say I told you so, but, if the math says go, you go. And so, that's the refinance market. But the purchase market, I'd love to get your take, Mark, because I'm having conversations every day about what's going on in the real estate market. I've got one thing, and then you tell me if you're seeing the same. Buyers and sellers are still a little bit of ways apart. Sellers think that they can get early 22 prices or May of 22 prices where 7 or 8 people want to offer on their house, and they set a new record for their neighborhood, and we're not in that same market. And then buyers, on the other hand, are squeezed. They're super picky. They find that house that they like, and based on that price and that rate, we're close, but I still need a $30,000 discount and $15,000 in credit to do a 1.0 buy down. And so, it's going to take some coming together. It's going to take a little bit of bend on both sides to get, transactions to happen still. But what are you seeing, brother?
I mean, I think, realtors are their worst enemy right now too. I think there's a lot of realtors, like we talked offline, that are giving sellers a big song and dance about how much they can get for their home. I think a lot of people are listing high. Every realtor we have this one amazing client. They're looking to buy this house that just came on the market, and we put in a list offer, all cash, 21-day close. It's a dream scenario. And the realtor, just because, maybe they got top producer tattooed on their forehead or something, I have no idea, but they're trying to spin it and I'm here and I'm doing this and we can't do this. And as part of me just goes like, I think realtors just get in their own ways at times. I think honestly, and I was talking to Matt outside this, I was like, realtors, yeah, I love being a realtor. But it's like sometimes realtors just have this ego and pride and they just get in their own way. And I think what we're seeing is a lot of that right now in our market. I think there is a gap. I think a lot of times too, if you look at the inventory, it's not the inventory people want. A lot of stuff is just thrown on the market and they're like, I want $700,000 for it. And it's like, well, it's worth 650. I don't care. You got to deal with the 2.75ers too. And it's just, it's a cluster out there and you really got to navigate around it. I think historically, there are spots that are always hot. Like, your Los Lagos can Grand Bay. There's areas in Roseville and everything too. But you really have to really understand the different areas, communities, and neighborhoods, price per square foot, and kind of see what happens. And then you got to compete with the new homes too. I mean, I've had so many people pivot to new homes because interest rates. And for me, my biggest thing is like, I want to know what tomorrow brings. Now, one quote, I want to swing it back to the Fed announcement real quick. This was probably a quote that made my day because this, to all you people out there who are thinking about, mortgage rates, Fed rate, and all this stuff, this is exactly what we deal with almost every single Fed announcement. Buy the rumor, sell the news. I love that saying. I mean, because that exactly describes what we get into. If everyone saw that basically rates kind of have dipped for the last 2 weeks, they were buying the rumor. People were basically buying bonds based that they thought Jerome Powell would be making an announcement that was way more significant than it was this evening. So they were buying the rumor. And now we got to deal with like the news, the reality of the situation. And for me, my biggest worry is that tomorrow, the next day, the day after, we're going to have people getting rid of bonds and interest rates, mortgage interest rates are going to start going up. And I'm a little worried about that, my friend. What do you think?
Yeah. I mean, I think that all the lead up and all the excitement and all the downward pressure on rates, like the air is out of that balloon. And so it's unfortunate too, because I've had a fun time doing a bunch of refinance. There's been like, I think the buyers of the last 2 or 3 years that have been stretched and they've been uncomfortable and they're buying things at 7% and 7.25%. They got their relief they needed. Their 1.0 buy down or temporary higher rate, higher payment they're able to refinance out of. That plan worked for them. But like future buyers who are, waiting on the sideline for this magic moment where rates are 5% and they're still able to negotiate like they are today. One, it's impossible for those things to happen simultaneously because we go to 5% and like demand is just going to like shovel back into the market. And two, like it's not very likely that rates move in any significant fashion downwards. Like, I don't think they're going to move significantly upwards either. So I'm not, going to warn against that, but it's going to continue to be an interesting market. And I like exactly what you said about people listing too high, not want to come off their price. I've like in the last 12 years, I've been a mortgage broker and I've been an investor who like actively looks at real estate. I have never seen more 100+ days on the market stuff as I'm out there piddling around. And to your point, like they slap it on the market. It's not in great condition. It's not in a highly desirable area. And they've got it overpriced. Like, what do you expect? And then after 42 days or 59 days or 73 days, like you think some magic, like, hurricane is going to drop the buyer in your front yard? Like what are these, I don't know. And again, I don't know if it's the seller who's stubborn. I don't know if it's their realtor who's, not strong enough to give good advice, but it's certainly, not working for a lot of people out there that are just, in la la land or something.
I think so. I mean, I think it's a combination of a lot of things. Like you said, like realtors not having that conversation. I think a lot of people out there, a lot of you, like the people who are like, who own homes are getting those calls around dinner time and saying, I could sell your home for this much money. And they're like, really? You could? Yeah. Okay, let's do it. And it's just cluttering up the market. It's cluttering it up. When you have houses out there that have unrealistic prices and you're wasting buyers' time, it is just a waste of time for everybody. It just clutters up our market. I want serious people out there who want to sell. I want a serious market. And I think one of the things right now that I'm seeing is it's just not, there's a lot of stuff out there. It's like, well, you want 2 million for your house. It's only worth like 1.7. It's
Yeah.
okay.
It's
I'm
funny how
good.
like the way you phrased it too, kind of like made me think. I think it's almost on both sides. You've got sellers who are kind of wishy-washy, like, I don't know, 700. If I don't get that, I might not sell. Well, you got buyers that are kind of in the same boat where they're like piddling around and like, you talked about buyers you have that are like cash buyers, serious, putting in great offers. Some are like that, but a lot of buyers are just like a little bit one toe in the water type of buyers where I'm pre-approved. I don't know. Like, I don't know. And then, you know, bless all my realtor friends. Some of them are just like in a position in in their career where they're not busy. And so, they're taking on clients that I think if they were busier, they just wouldn't even take on, where they're out there kind of spinning their wheels, showing stuff to buyers that probably aren't going to, you know, be serious about making an offer or do anything, but they're like, I've got the time, so I might as well. So yeah, I think like serious is a good word because we're in a
Yeah.
market where like there's a lot of people on both sides that aren't serious, and like the transaction numbers show it, right? When everybody, like sellers are wanting to sell, they're pricing right, they're negotiating offers, buyers are out there submitting offers that are going to get accepted, and they're closing on the deals. Like the transactions, prove it, right? Numbers don't lie. Right now, there's not a lot of action happening, and it's probably a little bit to blame on both sides.
Well, first, before we get started, I want to say thank you guys all for tuning in tonight. I really appreciate it. And like I said, you guys are all awesome. And like I said, shameless plug too. If you're looking for an amazing new home, new area, West Roseville is awesome. Look at JMC because they're crushing it out there too. And then we got some questions too. Also, guys, also there's a new button YouTube pulled out. It's called the hype button, and it's down below in the video. It's like right by the like button. If you guys could hit that hype button for me, I'm actually curious what it does. So if you could hit that hype button, it would mean a lot to me as well too. Supposedly something amazing. I don't know, but it'd be nice to see if you guys enjoy this live broadcast to smash it. All right. So we got Clayton that says home prices need to drop another 40%. Lots of job losses in some major employers in East and West Coast. I don't think that's going to happen. Like I said, I want my buyers to get a little bit of love on this one too. I think right now what we're down maybe around a little over 2% year over year, but we're not going to hit that. I think right now what you're looking at is, and this is what I'm looking at, I'm thinking like you're going to go, interest rates in my opinion are probably going to hover around 6.5 for the remainder of the year. I think right now it's up to buyers if they decide to pack it in and decide to just start shopping for the holidays and get going, or they decide that they want to really purchase a home and, look at the new homes, look at resale, but kind of get out there. Because right now, like I said before, like this big announcement today, and the reason why is because so many people were waiting on this. They were like, this is it. This is going to be the thing. And like I said, I wouldn't get caught up also when you hear, oh, there's going to be more rate cuts coming. I don't buy any of that. I don't buy any of it. If you've looked historically at all these Fed announcements, they've done nothing but allow, unfortunately, YouTubers to make videos and, collect revenue from that and just to stir the pot. These announcements for me don't really do a whole lot except for just get people like, timing the market and not timing your life. And so for me, I'm not a big fan of them. I think right now for you guys as buyers, you have to just figure out if the interest rate works, if your job is secure, you got money in the bank, if you can handle the payment, what you're looking for, and then just start thinking about getting educated about the market. For me, that's what I would do if I was looking to buy. I don't think we're going to see anything. I think within the last, maybe what was it called? Like the last couple of weeks, we've seen it dip. I'm thinking that that's probably the best it's going to get for a while. What do you think, Matt?
Yeah, so I've got my smart ass answer first, and bear with me while I give the smart ass answer, because I've got a nice one to follow. But there's an old saying, you can shit in one hand and hope in the other, and see which one fills up first. Like that's what somebody who's waiting for a 40% decrease in prices is going to have to do. And I promise you, the hand that you shit in's going to fill up before the 40% price drop. Now that we've got that out of the way, and I apologize, Clayton, it's my attempt at humor. I'm better at mortgage than I am at stand-up comedy. But the real answer is I get it. As a buyer, here's the problem. Over the last 5 years, when you take a look at mortgage payments, which is a function of price and interest rate, they've gone up 80%. And wages have gone up like 20, something to that effect, right? So like that affordability gap has widened. And so I understand why Clayton and other buyers out there are like, we need prices to come down. We need rates to come. Like, this is crazy. What I think is more realistic, though, Mark, is that we see home appreciation slow down, grind to a halt if it has to, 0%, 2%. And so over the next 5 years, if a market only sees 10% appreciation, but over that same time period, with technology and AI and jobs, you see wages go up by 15 or 20%, and maybe rates come down a 0.5% or a full percent. Now all of a sudden, like, you start to narrow that gap, and homes, like, by affordability metrics, become more affordable. But like some crazy crash in price, in interest rate, not going to happen. Just like you're not going to see a 40% increase in wages from 25 to 26. You're not going to see that either. You're going to have a slow burn of lower appreciation, lower interest rates, and higher wages. And then, if you're willing to wait until 2030 and your situation improves because you're making 30% more than you are today, and interest rates are 5.5%, and the house that you were looking at for 600 only cost 660, and so it hasn't, slipped out of reach for you, you can do that. But for most people, the best way to, it's like buying Tesla stock. The best time to buy was 10 years ago. Second best time to buy is today. Like, you just got to get in there, and you got to kind of ride out the storm. What's interesting, Mark, in my seat as a mortgage broker dealing with tons of first-time home buyers, I have rarely met a first-time home buyer that comes to me and just goes, "Great, I'm comfortable. This payment's cool. I'm feeling good. I'm feeling confident. Let's rock and roll." They're all scared. They're all stretched a little bit. Then they wake up 10 years later and like, "Oh my gosh, $2,200 a month? This is light work. I'm so glad I bought in 2016." Right? Versus some people that unfortunately I showed a bunch of stuff to in 15, 16, 17, like, nope, 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 nope. And then in 2020, the market was just like flying at 100 miles an hour away from them. So, time in the market has not worked out well for anybody that I've come across.
Here, and that's kind of the thing about it. Like, when they time the market, it just doesn't seem to work. And I keep telling people that all the time. Now, here's the thing for you guys right now, as you've seen the last couple of weeks, we've seen a dip in interest rates. Like I was showing you the chart earlier. Like, it's interesting. Today was the first day it kind of like crept up a little bit. As far as refinances and everything too, and we got Crowbar here. Hey, by the way, I'm glad you're feeling better as well too. What do you think? He says, isn't refinancing a scam? Paying for nothing, interest up front, you never pay down the principal.
So thanks for the question. I appreciate you joining. A lot of people don't understand how refinances work. And so, you bought your house 2 years ago, you got a 7.25% interest rate. And just for example purposes, your payment is $4,000 a month. I get it. I'm in California, so you might be out there somewhere and you're like, 4,000 sounds crazy. For some of you, that sounds like a dream because it's half of what you're paying. But if a refinance can lower your rate to $599 and you're now paying $3,500 a month, it does a couple things. One, monthly cash flow matters to people. I know because I talk to them every single day. Some weight off their shoulders, the not going into credit card debt because, their budget allows for them to pay off their kids' school clothes and whatnot. But to your point, Crowbar, when you do a 30-year fixed rate mortgage, I think what you're getting at is like in the beginning of it, of that $4,000 payment, maybe $400 goes towards principal, and then a big chunk towards interest, and you got your taxes and your insurance. And so the farther along you get on that 30-year path, a couple years down the road, 500 is going to principal, then 600, then 700. And so a lot of people are like, I'm resetting that. I'm starting back at zero. But here's the truth. You go to 599, from day one, 550 might be going towards principal because you're paying less interest on the total balance. And, there's plenty of stuff that you can do. You can go from a 30-year to a 25. You can go from a 30-year to a 20. You don't have to necessarily start over. But even when you do, and I'll give you the same example, if you're paying $4,000 a month and you come to me and say, I want to refinance, but I don't feel like starting over, right? Like I should pay less in interest. And, maybe on a $500,000, 7.25% interest rate is, what's that? 36,000 a year in interest, roughly, right? So let's refinance to 6%. Now you're only paying 30,000, paying 6,000 less per year in interest. That's how your payment goes down $500 a month. But if you're concerned about like it being a scam and you're only, paying interest, that $500 a month you save, pay it towards the principal. Now the new mortgage, you got $550 going towards principal on the new amortization schedule. You got an extra $500 that you're saving a month that you can pay. You're paying the same $4,000 a month. Now that mortgage pays off in 22 years or 23 years, maybe less, right? I'm throwing out random examples, but it's definitely not a scam. But here's what I will tell people. It doesn't always make sense. And if you're talking to somebody in a call center who's got like a quota and how many refinances they need to sell, they don't care about repeat business and family and friends referrals and their Google My Business profile page and their reputation. They'll sell you on something that they only look at one thing. Hey, I'm going to save you $250 a month. They didn't mention like $17,000 in costs got baked into the loan. Over the course of the loan, you're going to pay an extra $40,000 or whatever the case may be, right? Like it doesn't always make sense. A good mortgage broker is going to look at a break-even analysis. They're going to tell you you're saving $500 a month. Yeah, there's some title fees. Yeah, there's some origination fees in here. It's going to be about $6,500 that gets rolled into your loan. But if you're saving $500 a month, you break even in 13 months. If you plan on being in this house for more than 13 months, it probably makes sense. And oh, by the way, pay what you're saving towards principal if you want to knock the thing out faster, or even pay half of it towards principal, and you're going to pay the thing off in 26 years versus the 28 you got left. There's plenty of different ways to do it, but like a smaller interest rate where you're paying less interest to the bank is not a bad thing. It's not a scam, right? And so you just have to be talking to the right person that gives you the right advice.
Let me ask you another question, Matt, while we're on this. Okay, talk to us a little bit about recasting.
Recasting is something that a lot of lenders do, and it's really a great tool in certain circumstances. So the simplest way to put it is, you have a 30-year fixed rate loan, you owe $500,000, you're paying your monthly payment, and after a couple of years you look up and you owe $482. Well, you had a house that you left when you bought this new one, you thought it was going to be a rental. You're like, you know what? Like, I don't want to be a landlord. I'm selling. You sell it, you've got all this money. And you're like, man, I only put 5% down when I bought this house, but I wish I would have sold this house and put that money down. So you take $100,000 from that sale and you throw it at the new mortgage. Your balance goes from 482 to 382, but you're still paying your same monthly mortgage payment unless you recast. And so recast is telling the lender, hey, listen, I've got 340 months left because I've been paying this mortgage for 20 months. And I don't want to pay my normal payment. Can we take the 382 I owe and recast it over these last 28.3 years, whatever it is? Doing math and throwing out those random numbers. And so your payment will adjust based on that big lump sum payment. And so hopefully that made sense. But recasting is basically when you throw a lump sum at a mortgage and then you ask the lender, like, re-amortize this thing, recast this thing over the remaining term as if I put this money down in the first place. And so the example I shared is one example, but I most commonly see it when somebody says, I'm selling this house and I'm going to net 200 grand. And I'm buying this house, but I want to buy first. And so when I buy, I
Okay.
only have 5% to put down. So you buy the new house with 5% down, your payment's 5,000 bucks a month. You're like, man, this thing is heavy, right? If you had the 200,000 to put down, your payment would only be 3,800. That would feel a lot better. Well, buy the house, put 5% down, secure it. If you qualify, you can do this. And a lot of people do. Then you move out of the old house, you clean it up, you get it ready to sell. Mark lists it, he gets you top dollar. You take your proceeds, you throw it at the mortgage on the new house, and you call up the lender. You say, "Hey, I want to recast it." And for $150 or something really cheap like that with most lenders, they'll do the recast, and you'll have the mortgage you would have had you put that money down in the first place.
I love it, man. You're good. Mic
Ah,
drop.
yeah, I've been doing this a few years. I've learned a few things. I have a recast video on the Matt the Mortgage Guy channel. So if you're not subscribed to Matt the Mortgage Guy, I don't know what you're doing. I don't know if you know, Mark. I'm back to doing 2 videos a week. So I think today, um, if I'm correct, there should be a video out on like the refinance strategy no one's talking about. And,
Okay.
to the former question about like, is it a scam? You're paying all interest. The strategy that no one's talking about is like rates are down. Let's look at a 20-year. I took some clients, Mark, and this is really friggin' cool, in my opinion, because I'm a math nerd. Client calls me and says, "Hey, Matt, think about refinancing. Does it make sense? Go to 599." I'm talking to the client. The client isn't one of the ones that's like, I'm having trouble paying or I need my payment lower. He's just like, I should because the rate's lower, right? I know because you're intimate with the financial details of a client when you're a mortgage broker, that this guy is making even more money. He was making great money when he bought. He's making even more money now. And I said, you know what? You want to look at a 20-year? We look at a 20-year at 5.6%. And I'm like, dude, literally for $100 more than you're paying now, we'll refinance you into a 20-year. And so you've got 28 and a half years left. Your payment is only going to change by $100. You won't even notice. You're going to take 8.5 years off of this loan. Guess how much refinancing and going to a 20-year is going to save this guy in interest, Mark?
How much?
Well, you know what's wild? I just
Ha.
thought about it as we're talking because I can see the Excel spreadsheet in my head because I'm a nerd.
You got the Matrix.
Well, but between the 30-year and the 20-year, I just realized I'm only telling you what he saved between the two good options. 599 30-year or 56 20-year. It's a $204,000 in interest saved. 204,000. And like, of course he's not going to not refinance because he's at 7 1/8. But if he
Yeah, yeah,
didn't
yeah.
refinance, I bet you this 20-year is going to save him 300 grand. If he just like kept on the current trajectory of the current mortgage, like, God forbid you think refinance is a scam, you don't do it. You pay an extra 300 grand in interest. That would be a scam if the bank just collected all that from you. So, yeah, there's cool stuff like that where everybody's got different goals. I'm having conversations right now too. I love refinance, Mark. I really freaking do because it's math and it's fun and it's like figuring out a puzzle. And people are asking me great questions like, should I be thinking about a 15 or 20-year? And I remind them like it's different seasons for different people.
Yeah.
You're young in your career. This mortgage payment is a significant portion of your budget. You've got kids that have, school and sports and activities. Like, you don't want to anchor yourself to this huge mortgage payment that like cuts out all your vacation funds and all that. So like in this current season of life, I'm telling a 33-year-old, like, I probably wouldn't do a 15 or 20. Like, the numbers might look attractive to save a bunch of interest, but like, do you want your payment to go up $1,800 a month or whatever the number is? And so, you know, you're 50, the conversation might change, right? Like, I got clients who another set of clients I'm doing a 20-year loan for, nurse, educator. Both of them are probably going to retire in 10 years. And I'm telling, that couple, check this out, 20-year, very similar to the payment you're paying right now. with 28 years remaining. And you're going to shave all that off. Another cool thing to think about is like, even if you're not paying it off for retirement, a lot of people move. You don't stay in the same house for 2 or 3 decades. I was showing them the 10-year mark. The 30-year loan, you'd owe 376. The 20-year loan, this is after a decade, you'd owe 274. If you did a 15-year, you'd owe 180. So it's like you sell this house in 10 years, depending on the mortgage you take, you might have an extra 100 grand or two in equity because you've paid down the principal that much more.
Here's the thing, Matt. I will tell you one thing though. Like, I appreciate you coming on the show as well too, because usually, I mean, realistically speaking, a lender during refinance craze, they're MIA, man. They're like refinance.
Oh,
My
you
phone
can
calls
tell
going
I'm
in.
pumped up about this shit, man. I'm excited about it. Like Tatiana wants to know about what happened with the interest rate drop today. Your credit card's cheaper. Your car loans are cheaper. A lot of stuff's cheaper today, Tatiana. You know what ain't cheaper? Your mortgage. Because I
Yeah.
tried to warn you. I tried to tell you, Fed funds rate does not equal mortgage rate. And I apologize in advance. I got an Instagram post that said, I told you so. Mortgage interest rates went up slightly. It was only an eighth. And so I'm sorry to be the bearer of bad news. I didn't make it happen. I didn't do it. I didn't do 613 to 622. That was all on Jay Powell. Jerome Powell, what he talked about in the press conference today caused rates to go up. But what people misconstrue about the Fed funds rate is that this is like one small tool that the Fed's using to like change the overnight rate, the short-term rates. And so it's going to have a
Yeah.
direct effect. Credit cards, your car loans, what, your CDs at the bank or your, high yield savings accounts are going to get. It has a lesser effect on the long-term rates. The long-term rates, the mortgage rates, when we got these crazy job numbers where we all of a sudden like woke up and said, oh my gosh, the economy is in a lot worse shape than we thought, right? Like that's the stuff that has downward pressure on mortgage rates more than, a Fed meeting where the outcome has already been determined. Like we already knew the 25 basis point cut was coming.
Hey, Tatiana. Good evening. Sorry, but we're all pumped about this thing. But here, okay, I will tell you guys something though, straight up. This is what worries me about the rate, right? Right now, like I said, like if you look back here, you've seen that we've seen a dip. Look at that. That's crazy. Like as far as this dipping down, but this is what worries me. Okay. I keep harping on this. If market participants believe the Fed's actions are not enough to control inflation, or they anticipate further economic slowdown or even future rate hikes to combat inflation, they may sell bonds, which pushes bond yields up, leading to higher mortgage rates. All that I read, I feel that is somewhat true with our economy. And so for me, I'm wondering if tomorrow morning we could see people start selling bonds and all of a sudden this flips around and we start kind of going in the other direction. So that's for me the biggest thing. Like I look, everyone's always like, Mark, mortgage rates, Fed rate is completely different. Yes. But what they're trying to do is show an economic indicator, and that will impact mortgage rates. I mean, right now, because we got this, I mean, like I said, we dipped here is because people were buying bonds. They're like, hey, let's do it. Let's do it. Jerome Powell's going to drop it. He's going to do cuts. Everything's good. Today wasn't good news. I mean, it was a little good news, like I said, for credit cards and short term, but is it enough to basically make people kind of say, all right, we're going to keep going into the bonds, or are they going to ditch out on their bonds and all of a sudden are we going to go back up? And that's for me the biggest thing, because I just don't think today was enough. What do you think?
Yeah, I think you're probably right. And it's tough because there's so many different things that influence mortgage rates where, sentiment in the market, and volatility and where, money is being plugged. Is it, uh, in the stock market? Is it in secure, mortgage-backed securities? It's tough to tell. And, like I had a buyer ask me today, like, when's the next economic news that you think will influence mortgage rates? because there's stuff every day. There's jobs
Yep.
reports. There's this. Like, I think next Friday, there's going to be the latest like PC inflation numbers that come out, and like your little blip there showed, like people are still concerned about inflation, right? Like we can't go bananas and the Fed can't like lower the Fed funds rate, 50 basis points cuts and juice the economy because they know what that's inflationary, right? And so it's like
Yep.
this this impossible task of the Fed to like, hey, we need enough juice to where the economy is moving along and money's moving, because when money's cheaper, businesses can lend cheaper and it stimulates the economy, but don't stimulate it too much because inflation hurts people, right? Like it's really really tough.
Yeah.
So I don't necessarily envy the position the Fed is in. It's a tough job. But one interesting note from today too is like there's 12 Fed members and they vote. And people were like, maybe we get a 50 basis point cut because those jobs numbers were dismal. Like the Fed's got to
Yep.
step in. They got to cut rates. They should have done it sooner. There was only one Fed member, the latest one that just got appointed by Trump, that said 50 basis points. The other 11 unanimously 25. And interestingly enough, nobody said zero. Nobody said, pause. So
Yeah.
they all knew that it was needed. But a lot of people were thinking there's going to be 2 or 3 that were calling for 50. It was only 1.
Oh yeah. I mean, now check this out though. September 2024, Fed cut rates, but mortgage rates increased. Now, the biggest difference is the fact that back then we had, strong economic or employment reports. We don't now. So that could be our kind of like, I mean, it sounds horrible, but that could be our saving grace for interest rates, for mortgage interest rates, correct? Because I mean, the job reports was.
Yeah, and it's funny too because people are always trying to like say like, look at the Fed cut rates and rates went up by 0.5%. It wasn't really anything to do with the Fed cutting interest rates. It was like the current environment. We're in a friggin', election season, right? And so like volatility was at all-time highs. There was so much uncertainty. We didn't know who the next president was going to be,
Yep.
let alone what jobs were going to look like or what inflation was going to do. And so like with all that uncertainty, rates were on a uphill climb, and we saw 50 basis point Fed cut in September of 24, and then rates went to the moon for all intents and purposes. But yeah, we're in a far different climate now.
Yeah.
But we shall see.
Now, do you think, because we're hovering around that 6.5, do you think mortgage interest rates dipped to around like, what was it yesterday, 6.13 or something, in anticipation of the Fed announcement being stronger today?
Rephrase that again for my simple mind.
No worries. Okay, so like we're at 6.5 maybe 2.5 weeks ago. We're hovering around 6.5 and everything too. So all of a sudden, all this hype around Jerome Powell, they're saying, oh my God, he's going to, we're going like he's going to make some crazy announcement. The Fed rate is going to go down and everything too. And so based on the anticipation of that, mortgage interest rates started to dip, right? Because people are like, yeah, it's gonna be a good thing. Like, let's buy some bonds. Let's get into it. Let's do this. So do you think that that's true? I mean, do you think the reason why interest rates dipped to like 6.1, 6.2 is because of today? Is because the anticipation of today being a stronger announcement than it was?
I think that was a part of it, but a very small
Okay.
part. A vast
Okay.
majority of the rate drops that we saw recently, like you can look at certain days and like when they revised job numbers and they go, holy, like the biggest miss we've seen that I can remember in job, numbers. Unemployment's up, job openings are up. I can't remember the exact report, the exact numbers, like early September, but like it was a huge miss. That same day, rates went down a ton. And so that stuff had a far bigger impact. There was a little
Okay.
bit of trickle in the downward direction because of, because of the anticipation of not just this rate cut, but we're anticipating 2 more, right? And like
Okay.
we'll see what the dot plot and there's I can't remember what the chart is called, but it basically gives a percentage to like how likely is it the Fed cuts the Fed funds rate in the next meeting. Like it was 96% they cut today, and then it was like 80% they cut the next meeting. And like the analysts were saying there was a projection of 2.2 cuts in these next 3 meetings. So they're expecting, at least 2 of them get a cut between 2 and 3. We'll see if that changes, right? Based on what Jerome Powell said, based on, what they're seeing. And it's all subject to change. That's the interesting
Oh yeah.
part is like, inflation numbers come out next week. If inflation's super high, they'll be like, we can't touch the Fed funds rate. We go lower, that's going to juice inflation. We don't want that. Jerome Powell says the same thing. It's so friggin' boring listening to the guy talk. Like, I got a dual mandate, right? Like, inflation and jobs. I got to keep inflation low and jobs steady, whatever the exact verbiage is. But like he says that every gosh darn meeting, and it's it's the dual mandate of the Fed, but they're data dependent. He'll say it every single time, right? Like something comes out next week and a data point says should or shouldn't do this, it's going to affect what they do in future meetings.
Okay. It'll be interesting to see what happens towards the end of this year. I mean, like, for refinances, still think at least you got a little bit of an envelope. I don't know. It will be interesting, but I will say for you guys out there, just stay it. I think it's almost more important the next couple of days after the Fed announcement as opposed to the exact day. You're going to see the direction of everything happen in the next couple of days. Like I said, it's gonna become clear, I guess you can call it. Okay, so let's go into some of the fun Sacramento questions. And do you guys have an answer? Please bring all your questions. We got it. Matt's local to Sacramento, which I absolutely love. Born and raised Sacramento Kings fan. He's the man, the myth, the legend, and he does so many loans. It's like not even funny. So we're going to go into some fun stuff. We're going to talk about all this stuff, but also if you have interest rates or mortgage questions, Matt is awesome with this stuff as well too. And he has an amazing channel that after we get off the show, he'll put it as one of the top comments. So go to his channel. And like I said, he just tells you how it is. I mean, he transparent as it gets. Okay. Evening. Can you provide the opinions on the new area of Rancho in the recent report that it took over Roseville as the area with the #1 sales? One is, I'll tell you something about the Rancho area and by the Anatole area, is the fact that Rancho hasn't changed that much as far as their pricing goes. West Roseville, awesome. Love West Roseville. But West Roseville now, it's kind of hard to get anything underneath 600,000. Where in Rancho right now, you can still get homes like literally like with Elliott going in there at like 400 something. I mean, like you still have that affordability. And I think right now, because of interest rates, and they also have the best incentives in all the Sacramento area. With the incentives, with the price point, people looking to get their home and and the interest rates are high, like Rancho has become that spot. Khav went into Rancho and literally that area of Rancho, and I'll call it Anatolia just so it doesn't get confusing. Back in the day, 5-6 years, no, maybe about 8 years ago, you couldn't get anything in that area for like under $600,000. Khav went in there, started building at 400, set the tone, and now you have one of the most affordable spots in the Sacramento area to get a new home. Elk Grove Unified, good schools, and people are just coming to it because they're building a pretty amazing community out there. But if you're looking for something in Sacramento and you're saying, I want a brand new home, I'm looking for like around $500,000, Rancho's kind of it. Honestly, Rancho's that spot you go to. And that's why sales have been probably crazy in Rancho because affordability. What do you think about that area, Matt?
You know what? Like I like born and raised Sacramento, been here all my life, 45 years, grew up in 95826. So I'm literally like 10 minutes from Rancho. And I remember like 10 years ago holding an open house in Rancho with a real estate agent and being like, oh my gosh, dude, Rancho's kind of nice. Like, no offense to Rancho, but when I was a kid in the 80s and 90s, Rancho Cordova was not nice. And so, they incorporated it as a city, got their own police force. That helped, right, over the last few decades. Yep. But I'm surprised to hear because I'm stuck in this office behind this dang computer, crunching numbers. You heard my passion around, refinancing numbers. So I don't get to get out as often. But to think about buying a new home, sub 500 grand, Rancho's got easy access. You hop on 50, you get downtown. Like I know location wise, it's a great place. And the city has come up. I've got a question I want to ask you before I forget, because I'm curious and I honestly don't know. this connector that's going like Elk Grove to Folsom, does that go through Rancho? Is that
Yeah,
gonna yeah. Like,
Grant
because
Line.
that makes me think like that even almost gives me more hope that there's like even like the projection for Rancho is even higher. Access to get to Folsom, to Elk Grove, because you're already like on that 50 corridor. You can move about that way, but that's that's pretty cool to think about that because yeah, that section right is more south, right? So I guess it's
Yeah.
not as close to 50 as the older parts of Rancho that I'm thinking, but um, how big are the houses that are building for sub 500 grand?
Probably about like 1600, 1700, something around there. I mean, they're good homes. I mean, like as far as for the price point, they're the best bang for your buck if you're looking for a new home in the Sacramento area for sure. But I
I
mean,
could
that
buy a
Rancho
couple of
area,
rentals, bro.
yeah, I mean, Elliott came in, the new community over there too. But the thing about Rancho that makes it so appealing, Elk Grove Unified, right? There's going to be new building, new commercial going out there. They have the Braden project, which is this like work, live, green kind of project that's happening off of Douglas, super close by. You got the connector. And then you have all this building that's going to be happening between that Anatolia area and Folsom, right? So you got the sports complex they're putting in. You got all of a sudden, what is it, like the other schools that are putting in between there. Like the area is kind of merging together. So the Rancho area for me, I mean, as far as like potential, as far as everything goes, you know, I mean, I look at it and I say, hey, come into the area, you want a brand new home, you're looking $500,000. Like it's just, there's no other spot I'm looking at in Sacramento that you can do that. Like Roseville, it's hard. I mean, Roseville got really kind of, just even with all the building happening there, the price point underneath 600 is still hard in West Roseville. Vineyard, there's only one builder out there, Taylor Morrison, and it's still not that easy to get a home there. And they're all 2 stories. If you're looking underneath 600, Elk Grove, KB Lexington used to be that spot. You can get something. Now it's not. Elk Grove is just booming. Folsom, forget about it. Rockland, forget about it. Roseville, West Roseville, like I said, 600, Lincoln. And then all of a sudden, if you're looking at that price point, where are you going? You're going to Plumas Lake. You're going to Linda. And a lot of people are like, I'd rather go to Rancho. There's just a lot more stuff to do. So yeah, no,
Yeah.
it's one of those
No,
spots right now.
no offense to Linda for all the Linda folks, but you give me a choice of Rancho or Linda. I'm uh, I'm Rancho 10 out of 10 times. Sam
Yeah,
the
I mean
Lebanese. I was
oh
gonna
yeah.
say
And
I want to hear
also
about this one. He's
now
buying
check
one.
now check this out though. This is interesting. You probably didn't know about this. Rancho, and I'm not myself, I do not drink. I just do not. But I will tell you one thing, Rancho actually has what's called the Barrel District, where they have a bunch of microbreweries, they have Flaming Barrel, they have All Movement Brewing Company, they have all this interesting stuff out there too. Family friendly, like Rancho. Rancho's good. All right, you want to read it? Go, Matt.
Yeah, so Sam the Lebanese, he's talking about buying something that backs up to that old Anatolia neighborhood that's well established. That stuff was being built 20 years ago. I had plenty of friends that bought. Some of them kept their houses through the GFC, some of them did not. But that that's another story. So is it what's the zip code, Mark? Is it 24 for the Elk Grove
Mm-hmm.
school or no?
Yeah.
Yeah.
I'll double check my iPad, but it's basically like everything. If you look at Rancho and you look at like, if you type in Anatolia, Anatolia was that community, 2006, they built it, big houses. I mean, it's bizarre, right? When I first heard about Anatolia, it's like you go out there and you're like, these are like big monster, 3,000, 4,000 square foot homes. I mean, they were building like crazy. And then 2008, and then they
That was the
started going
McMansion
again.
era, baby.
Oh yeah, it was crazy. Everyone was owning like 12 houses. It was weird, but yeah. So that whole area is just developing, growing. I mean, it's best bang for your buck. I mean, if you ask anyone, can you get into Sacramento for like $500,000 or even in the high fours? People would be like, there's just no way, no way. So this area is one of those like spots. I would say if you're looking for that, I mean, it's solid. And like I said, they're building like, like commercial out there too, close to Folsom, Elk Grove Unified. There's some gotchas, but for the most part, like, I don't know, like I said, I,
You have
I
Melrose or
like that
anything on
area.
those houses?
Oh man, there's no new homes that are building in the Sacramento area that doesn't have Melrose. Melrose, depending on where you go, like you can go in Anatolia or in the Rancho area anywhere between like 240 all the way to like maybe 460, depending on which builder. Like but I mean, they got a lot of them out there. They got Lennar, they got Woodside, they got Tri Point, they got Khov, they got Beezer, they have Elliott, and Pulte's out there as well too. So they got builders galore. But the competition, but they've just managed. I think I think the price point actually would have gotten higher in the Anatolia area if Khov just wasn't pretty much like, nope, we're building them for 450. We're doing, and they have a new active community out there too that you can get something in the fours. So I like that area at best bang for your buck, I think. And the only reason why, like I said, I love West Roseville. It's just that it kind of became a little bougier. And, you know, you got Costco coming out there, the new surf park they're building and everything too. So West Roseville, I think it's a great spot. I love West Roseville. I just think right now it's in that growing pains between, you know, before it was like, hey, we're competing with Rancho. And now it's kind of going, we're not Elk Grove just yet, but we're getting to that area where things are kind of pricey over there. So it's good. All right, we got Wendy. Do you expect more? Hi, do you? Hey, Wendy, how are you doing? By the way, it's sorry about everything too. I mean, it goes back to what I was telling you, Matt. A lot of sellers are just not putting their homes on the market in the way that we'd love them to be putting their homes on the market. So it is what it is. But
Wendy's my friend too. She's in Gold River, right?
yeah, Wendy's awesome.
Yeah.
All right, do you expect more houses?
Wendy's kind of relocate, but yeah.
Wendy's awesome. Awesome. Like one of my, like we talk daily, and like my main goal, and I told her all the time, I'm like, look, we want to find you that great house. I don't want you moving anytime soon, Wendy. I want you to find your dream house. So we're here for you until you find it. And yeah, I know. We're with you on your latest decision, by the way. Yeah. Do you expect more houses to be put on the market in Gold River and Rancho now that interest rates have dropped? I think it's going to depend on the next couple days. I think what you're going to see is if rates start kind of ticking back up to 6.5, I would say sellers made a big push during summertime to sell and spring to sell, and demand was low. I mean, if we hover back up to 6.5, I think the new home market still could be popping. I think refinances are still going to be popping. I think resale market is probably going to be hurting a little bit. And if I was a seller, I honestly might pack it up and wait till spring. What do you think, Matt?
Yeah, I mean, it's going to take the, you know, the right house at the right price to get a buyer. So, you know, a seller that's just kind of like throwing something they're out there to sell. And I don't see a bunch of people, because I think what Wendy might be asking indirectly is like, are we going to unlock more inventory? And the true unlock for inventory is a lot of people that like are in a position where if the right scenario presented itself, yeah, we'd want to move a little closer to the grandkids. Yeah, we want to, you know, upsize and have a slightly bigger house. We just had our third kid. Yeah, it would be nice to do these things. But currently, 2.75%, $2,200 mortgage versus what they're looking at if they bought a new house at a new price and a new interest rate, they're just going to pause, right? To unlock those buyers, you know, that are locked in, I think is a term that's being used some. Like, it's going to take mortgage interest rates coming down quite a bit more. Like if I were to peg it, I might say like 5.5% is going to unlock a certain portion of those sellers to where all of a sudden you're like, oh, there's these 7 houses or these 12 houses in Gold River where somebody was thinking about moving, but decided not to because of, you know, the math of it or whatnot. And then all of a sudden rates go to 5.5. They're like, yep, I'm relocating to the 55 plus community. I'm relocating to the neighborhood where my grandkids live. I'm relocating to, you know, XYZ. And so, you know, for that unlock and for more inventory to come on in the resale market, we're going to have to see mortgage interest rates come down. And to your point, Mark, like it's not going to happen in Q4 of 25, in my opinion.
Yeah, I mean, you'll probably wait until spring. But here's the thing. There's a silver lining to this, Wendy. If you look at Gold River, majority of the houses were built, and there's a lot of original owners who just love Gold River, and they've been their houses forever. So you look at a Gold River, houses were built in the 80s. So what is it? Like, people are right now ready to make that move to downsize. So what you're probably going to see is in areas like Gold Rivers, the areas that were built out in the 80s and everything too, they're ready to make the move. So I do think like spring probably is a good target, hopefully. But like I said, I wouldn't say lose hope. don't lose hope. I mean, like you could see something pop on the market this week. You could see it just, I always tell people this, and Matt, this is completely true. It just takes one
Right.
house or one buyer, and all of a sudden that frown turns upside down and you're done. It's over.
I literally
I
was
did
thinking
it.
as you were talking, right? Like there's going to be a scenario where somebody is in a must sell. And honestly,
Yeah.
as a buyer, that's who you want. You're like, this was a great couple. They were sweet. He was 94 and he passed peacefully in his sleep. And his wife, who's 93, is going to assisted living, right? And so that house is now for sale. The people who are going to inherit it don't want it. So the kids come together and say, list this house and sell it. Market
Yep.
at a price where we can get it gone in 60 days because we're trying to fund mom's assisted living bill or whatever. And so like there's no predicting that, right? And that's like a must sell. Um, so yeah, to your point, like I was doing some math because I'm a math guy, and I was thinking morbid thoughts, Mark, where you're like, if they're built in the 80s and people were X number of years old when they bought their house, then this year, they might be in a position to. You said downsize. You were thinking less morbid than I was, but there could be some people that are moving on to the afterlife in Gold River.
You never know, man. You never know. All right. Devin says, hype button has been smashed, my guy. Thank you. Appreciate it, guys. And if you guys are watching this, you enjoy it, hit that like button. But there's a new button on YouTube called the hype button. Smash that hype button. I'm just kind of curious what it does. Supposedly it hypes up the video. So help me on
Is
that.
that only on lives?
No, it's just on all videos. It just popped up like a week ago. So I've been like going like, what is a hype button? But it'll be interesting. All right. Clayton says, is not for off base. 30% price drops are reasonable just to bring us back to normal affordability, in line with pre-pandemic trend. I mean, it's not going to happen. I'd say at most maybe like 3, 4, but I wouldn't even hold my breath for that, to be honest. What do you think?
Yeah, I mean, if Tesla was $40 a share, I could afford to buy more shares. So why isn't Tesla not 40? But like, I don't want to be a smarty. This video guy Matt has got a great first name, but like, just because we want prices to be 30% cheaper, or just because at one point in time, like the ratio between wages and prices or monthly payment and average wages was X, doesn't mean we have to go back there, right? Like there's probably going to be some directional movement towards like pre-pandemic trend or whatever you want to call it. But like if we never get there, there's no like overarching law that says like homes must be 3.2x the average median income in that state. Like that's not how it works. So like I would love it. I'm team buyer. I work with buyers. I don't work with sellers. I'm a mortgage broker. So I would love for prices to go down 50%. As an investor, I'd buy a bunch of stuff, but like to think it's going to happen is kind of just giving yourself false hope where, it just is a dream.
I agree. Deal with the present. That's one thing I will tell you. Deal with like right now. And if you start focusing on like what's going to happen with the market and all that stuff too, it just gets a little confusing and it just gets a little frustrating. All right. John says, can you please explain why today mortgage rates went up a little, even though the Fed fund rate was cut? It happened as Jerome Powell was talking. You want to explain
Yeah.
a little?
Yeah. So, I mean, the simpler explanation of it is one, the Fed cutting the Fed funds rate, which again is like overnight rates at which the banks lend to each other. It's a short-term interest rate. So it's not like there's the short-term rates and there's 30-year fixed rate, and they're on opposite ends of the spectrum. So they're not the same thing. And the thing that makes it extra confusing for people is that like they do kind of follow each other. The mortgage rates will follow the Fed funds rate. It will follow the 10-year treasury, but it's not like an exact science. Over the last 6 weeks, part of the big drop in interest rates we've seen, like I said, had to do with other economic factors. But part of it was that we knew this Fed rate was coming. And so the reason why the rate went up, though, and didn't just stay flat because we already knew, is that Jerome Powell gets up and he has a press conference right after the 11 a.m. California time. They announced 25 basis point rate cut. And then they release their dot plot, like what's they're doing for the future. And they have a press conference at 11:30. It's usually like an hour long. And so the dot plot, it signaled like 2 additional cuts in 2025. So that's like good. That would have downward pressure on rates. And like in the very beginning of his press conference, you saw the 10-year treasury go to 3.99. Mortgage rates were getting a little bit better, but then Jerome Powell opened his mouth, right? And he starts like framing today's cut like it's a risk management cut. And like he was talking about how the forecasts and the dot plot like don't represent a plan for future cuts. So he's like, we're not in a cutting cycle. He didn't say that, but he said it in so many words. We're going to take it on a meeting to meeting basis. He always says that. It's like based on data. So he was pulling back on like the whole idea that we're in a rate cutting cycle, and the bond market did not like it, right? Mortgage lenders, I'm a broker, so I'm brokering to 50 different lenders. Like they repriced for the worse. Mortgage rates got worse by the 13 basis points you saw on the slide. 9 basis points, 6.13 to 6.22. So they're higher than they were this morning. And hopefully that kind of explains it. But, anything you saw around the Fed is cutting the Fed funds rate on September 17th that tried to say that is a mortgage rate cut. That's what you call marketing, folks. And anybody who was like the better.coms, the rocket mortgages of the world, like, trust me, I'm in the emails too. They're like, the Fed's cutting rates. Call now. Talk about refinance. Like, it was a great attention getting marketing ploy. But Fed funds rate does not equal mortgage rates. You learned that today.
Okay. And also, here's the thing too. It's like, I mean, this is kind of how I look at it myself. And like, I've done kind of research about this as well too, but it's kind of like, you got like investors who probably prior to the announcement were like buying bonds, right? And all of a sudden, probably here in Jerome Powell, they probably stopped or started kind of selling, correct? I mean, is that kind of how it works? Matt?
Oh, I'm sorry. I got distracted. I never told you my rant about the real estate agent. Then I opened up a text from a real estate agent. Gosh darn you, real estate agents. Come again, man. I got ADD. I'm chasing squirrels over here.
Nah, it's okay. Okay. I want you, because a lot of people are confused about this. Explain bond yields and exactly like, when people buy them, mortgage rates, well, they go down. When people sell them or kind of hold off on them, rates either stabilize or mortgage interest rates go up, correct?
Right. And so you can think of it as like, if you need to like sell more of something, you lower the price and people come and buy it. Right. And then when like mortgage-backed securities, like in a similar fashion, people are like investing, and the price is fluctuating to either increase or decrease demand. And so, you want more people to buy, you increase the yield. Like, look it's higher. You're going to get a higher yield. Come buy.
Yeah.
So hopefully that makes sense. And so like, that's the thing too, where in the past, and I heard something today, Mark, which was pretty wild. Like, there's a chance that in the future, the Fed might buy mortgage-backed securities. And when the Fed is a buyer, like, they're able to affect mortgage rates. I think I saw something that was like, that could push mortgage rates into the low fives. And so you talk about a world where we're saying all this demand is unlocked and there's more activity with rates being 5%. Like, if there was just a change in policy, and when you look back to 2021, when mortgage rates were at historic lows, the Fed was buying some astronomical figure, like 20 to 30 billion in mortgage-backed securities, right? Like, you didn't have to give yield to draw buyers in, they were the friggin' buyer, right? Like the
Yeah.
government was buying them. And you know, so that was having a huge like that was pushing mortgage rates to what we saw, right? Like 2.5% on a 30-year fix. So like it's not out of the question that happens again. You know, the optimistic people out there will be like, oh yeah, we'll wait for that. You know, the you know,
I will say that some people might even say we're in the problem we are right now. We're in this problem currently because of what they did back then. And so will
right.
history repeat itself? Could we? I
Yeah,
mean, yeah.
the 50% increase in prices, we can't undo that, man. Like the crazy, crazy bull run that real estate prices had because of you know, the fact that money was so cheap that in a lot of people's opinion broke the housing market. Like that's the reason the housing market is broken.
Oh yeah, it still is. You got a bunch of people with 2.75, some VAs at 2.25 that they're like, I'm not ever leaving my house. Like there's just no way. I love my rate. I kid you not, and I always say this on this channel. I'm like, if we had printed t-shirts that said, I have a 2.75, if you're a realtor, leave me alone. You know what I mean? Like we can make a whole lot of money. All right, we got Video Guy Matt. And Video Guy Matt, I love how you stir the pot too. Video Guy Matt is awesome. We don't even know how many people are currently in default. Lenders are holding back NODs. If we're anywhere near a free market, we would have crashed a long time ago. What do you think of that?
You know what? Like as much as I want to push back, and you would expect me as a mortgage broker who's like raw Kool-Aid real estate, like there's some truth to that comment of like we saw it, you know, over the last 5 years, like unlimited amounts of forbearance and different programs. Like it's clear. It's clear as day. Like a housing market crash is disastrous for the economy. Like, and so I truly believe it now too. Like to your point, Matt, like lenders are hiding NODs. The you know there's programs to help people, you know, forbearance and don't pay and tack it on the back. They will not let mass foreclosures happen. That like I agree with that. And so you know your argument is valid. Like if we're anywhere near a free market, we've crashed a long time ago. There is an element here that's not a free market where it's like, listen, like we have to protect this humongous real estate market because it would have a disastrous effect on everything else. You know, I don't think that means it's like a big house of cards and, you know, real estate is worthless, but the point I think is valid. And, you know, I've seen it firsthand as a mortgage broker. I've started to see some stuff, especially around FHA, where those more loose guidelines, while it allowed more people to participate and become home buyers, like that, whatever saying it is, like the hens coming to roost or whatever. Like I'm seeing defaults, especially in FHA, where you know people had a 57% back end DTI, marriage went south. With two incomes, they were barely doing it. With one income, there's no way, right? And that house is being short sold. And other cases where it's like, you know, with a 550 credit score and a gift from grandma and, you know, three incomes, they're able to qualify for this FHA loan, but one thing went wrong, one job got lost, one car broke down, one AC unit went out, like they can't afford to pay, right? And so that one's in default. So I agree that, you know, there's some of that. We're nowhere near, you know, 2008 levels. But, you know, I guess what I'm trying to say is I hear where you're coming from, and it's not totally off base, but like there's still going to be no great financial crash.
All right. We got Clayton. AI is supposed to devastate the job market. Well, I guess you said market. I think it is. I mean, I think it's just, I mean, I think it's obvious. You know, I've already heard of people losing their jobs because of AI and everything too. So I think it is. I think, but I mean, I will tell you one thing in the real estate world, you know, you talk to a bunch of realtors and they're paying Zillow. I mean, Zillow, what the havoc Zillow has wrecked on the real estate market, For my industry specifically, like we are our own worst enemy when it comes to that stuff too. So will AI do it? Yeah, there's a bunch of realtors out there doing AI stuff and everything too. I'm like saying, like, once some big players get in there, like, we're not going to even have room to breathe. So yeah, I think AI is definitely definitely coming for us all, man. But I think it's obvious, and I think people who don't see that, just are a little bit kind of blind about it. All right, video guy Matt, I might buy a billboard. The Fed does not control interest rates. You're 100% right, and I'm sorry if maybe in this broadcast it's been a little confusing, but yeah, the Fed rate, short-term interest rates, mortgage rates, interest rates are bond yields. So completely two different things, or long-term. So, I guess hopefully I'll keep flashing this message on there just to make sure, and you keep writing it because I'll make sure we got that right. All right, we got video guy Matt. The Fed controls overnight rates. Mortgage rates follow the 10-year. The 10-year went up after Fed rate overnight rates because smart bond buyers saw it as a Fed caving and more inflating. Inflation coming. And I think that's kind of what Matt was saying as well too. Like for me, I think they expected it to be a little bit better. I thought they expected Jerome Powell to be a little bit more aggressive, and he wasn't. So I think that's where we got.
Yep.
All right.
Yep.
We got Sam. Unfortunately, I don't think prices will crash. People locked in homes with low rates. Agreed. Totally right there. So there's not enough. New supply. If rates drop, there's a lot of buyers sidelined, ready to scoop up new supply. I think there is. I think one thing you are seeing is, and people get a little confused when you see stuff that's been on the market for a while. Honestly speaking, it's either like not a good house or it's overpriced. And I had a talk with a lot of my team too, and I was like, they're like, why hasn't that one moved? I'm like, it's price. It's usually price. Price dictates so much stuff about our market. If something's sitting there for 90 days, 120 days, it's price. Wouldn't you agree, Matt?
Oh, 100%. And it's funny how like obvious it is to people who have a clue, right? And then like, the best realtors I work with, I listen to them talk, and I listen to how like confident they are when they speak to their sellers. And, you can't just tell a seller what they want to hear and be a great, effective realtor. Like I've got a perfect example of a great client who came to me, said, I'm looking to sell my house. Here's the area it's in. And I introduced him to a realtor buddy of mine. And the realtor buddy of mine, knew this person, ran in similar circles. When I had the initial conversation, I said, I'm not going to talk price, but like, what's that thing worth? And he goes, I don't know. I think I can get $450 for it. And I tell him before I even know anything, what you're going to get with the realtor I refer is honesty, whether you want to hear it or not. Right. So he'll shoot straight with you. It's the kind of guy he is. I have a conversation after the realtor and client have talked. I have a conversation with the realtor. I go, what's up, man? Like, what do you think? He goes, well, 450 was a dream. I showed him a model match that's listed for 429 that's been on the market for 64 days. So like in another scenario, Mark, you know it, and you said it earlier, that client, if they called random XYZ realtor off of the interwebs and said, I want to sell my house for 450. Oh, I can get you 450. The stuff is sold in that area for 470 before. First time home buyers, they're all over that. I got you. Let's go take some pictures. We're ready to roll. The honest, great realtor says, sorry to inform you, but like the market has already spoke. If this one has not sold at 429 for 65 days, if you really want to sell and you don't want to sit like them, you probably want to go on at 415.
Yeah.
And like, that's not easy for a lot of realtors to do, I guess, right? But it's necessary. And if you're doing your job correctly, like you list at 415, all of a sudden people come to that area, they're like not looking at 429, we're looking at you. You're brand new, you're on the market. People have this connotation, longer on the market means a dud, something's wrong with it. And boom, someone offers you 420 day one. Month and a half later, that 429 is so desperate, they go down to 409, and they sell for 411. right? And they spent 3 months paying 2 mortgage payments because they've already relocated. Meanwhile, the client who listened to the smarter realtor, the more honest realtor, the straightforward realtor, sold for higher and faster.
I've got a solution for it. I've got a solution for exactly the problem. You ready for this? And realtors out there are probably going to hate me. I think listing agreements are too long. I think they let stuff sit on the market. They lock sellers into these listing agreements for 6 months. If you can't sell something in like 5 months, like you can't, you're hoping, you're
Make it
praying
90
for that
days,
lucky.
bro. You can't sell my house in 90 days?
I mean,
Like The Apprentice,
like
bro, you
honestly,
fired.
like, I mean, if that pressure was applied by a shorter listing agreement term, I think the realtor is going to be hustling more. I think they're going to be doing the open. They're just be going, and they're going to realize there's a window for them. All their work, all their marketing is going to either pay off or it's not. And I think like a listing agreement for 6 months is just, for me, it's just ridiculous. I think it just lets people go, well, we'll see. I mean, and then at the end of the day, I mean, just my own 2 cents. And like I said, I just think listing agreements for 6 months are just ridiculous. So that's just me. And, like I said, I just, and right now realtors are like, what? Oh my God.
Real
I was going to
estate
go to
reform with Mark McDonough.
what? Wait,
Coming to a
hold on.
neighborhood near you.
What? I was going to go to Cabo for the first 2 months. It was on the market. And then I was going to come back and sell it. Gosh, come on, All right. Video Guy Matt says, check out unemployment rate of recent college grads. No one can get entry-level jobs because AI has replaced them, and AI is coming for all of us. What happens when 10% of home buyers are unemployed? I'm with you on the AI thing, man. In fact, I'm wondering if Video Guy Matt is really AI. All right. We got Sam again. Sam, how you doing tonight, by the way, man? Mortgage rates will not come down sustainably unless the unemployment rate spikes and creates a shock that causes a crash in long-term yields. The Fed doesn't control long and the economy does. I agree with you. And I think that like this is horrible, but like, what I've seen is like when job numbers, real job numbers are revealed, that's when I see rates kind of like, that's when the next day it's just like it's affected by it. I mean, this Jerome Powell thing, just, I think it's much to do about nothing. You know what I mean, Matt?
Oh, for sure, dude.
When I see a bad job report, I'm like, rates are going down. There we go.
Yep. Yeah. You want
All
rates
right.
to go down? Hope for, disaster in the economy.
I mean, isn't that just the irony of life? I mean, the irony is just that you're like, yes, bad job numbers, unemployment. Yes. Rates. It's like makes you feel like you're just cheering for the bad guy. You know what I mean? It's not fun at all. But all right, we got Shanna and her and her husband just moved into the area. One of my favorite couples in the world. And her husband has a business. They're cleaning gutters and everything too, and great business and all that stuff too. If you guys are looking for that, let me know. She's awesome. Her husband is amazing. They're really like sweet, salt of the earth. They moved up from LA to Sacramento and they're getting a little bit of a feel of it. And I talked to them actually too. And they're like, should I rent first? Should I do that? And I was like, if you don't know the area and you don't have the time right now to come up and get to know the area, I mean, sometimes renting is that thing to kind of get to know the area. I mean, I don't know necessarily if I would buy something if I only had a couple days to scout out the area,
Yeah, I made a video about that too. I had a client I was talking to. It's like, I used to live in Reno. I'm moving back, but I'm not gonna list my house for sale until I find a place in Reno. And like, I don't know. Make a long story short, I was like, get your house prepped, sell it. Part of the reason too is like I know the realtor that referred her. Like, he was like, average days on market in this specific neighborhood is like 55. Like, it's not gonna sell fast. So like, sell that house, go rent, like sign a 6-month lease in Reno. Like, it might have changed in the 2 decades since you've been there. And then, don't be in a hurry and be able to find a house you love, put an offer in it and buy it. So yeah, like renting's the answer sometimes, even coming from a couple real estate guys.
Yeah, 100%. All right, we got this. They'll own nothing and be happy. The next generation. It's a tough one. Having kids. Matt has a couple kids as well too. You definitely worry about the next generation coming up and wondering like what that's going to look like. Buying a house, AI, all that stuff too. Hopefully, it's not as bleak as people paint it out to be. All right,
Yeah,
Sam says, "Not."
yeah,
Go for it.
peop-
Hit it.
people, it's like, oh, people can't get a job out of college. No one's going to own a house. Like, if that's your attitude, like, good luck to you. I've never seen that help people out, having the woe is me and the poo poo pants attitude. I think that people are going to be just fine. I mean, there's some positives that's going to come out of AI. There's going to be more jobs around people that are great, um, you know, utilizing AI. You can prompt it, you can build things that utilize AI. Something that I'm super bullish about that I think this next generation could really benefit from is like, how many boomers do you know that operate a business that is a profitable business and does well with no technology, right? Like, whatever it is,
Yeah.
uh, you know, laundromat, a landscaping company, like go in there, optimize, use technology, 10x the company. You'll do well. You'll hire more employees because you'll scale and get bigger. Like, everybody wins. That's one side of it. Or we're all gonna rent and own nothing. Nobody can get any jobs.
Yeah, it's going to be interesting. For me, I think AI is one of those things where you just got to get on board with it, whether you like it or not. Stay on top of the technology as best you can. And I'd say for all those people who bought AI stock back in the day, you are lucky, lucky, lucky. All right. So we got Matt. What is your Instagram account?
Matt dot the mortgage guy.
There we go. I love it. All right. Sam says not all the areas in Elk Grove are Elk Grove USD. In Rancho, it's honestly street by street. You also have a variety, 500K, possibly for smaller homes, but you can go up to 800 in Rancho for larger luxury homes. It's an interesting market. I mean, the Anatolia area, is interesting. The other part of Rancho is interesting. Also, like Matt's a big lover of the whole College Glen, and which it feels like a bleeding into Rancho kind of thing, but different. Like I don't know. I'd say you can find anything you want in Rancho. You can get those old style ranch homes as well too. Rancho's interesting, but I definitely say street by street. What do you think, Matt?
Yeah, for sure. Because there's like, definitely some different neighborhoods, different parts of Rancho. My wife actually spent some of her childhood in Rancho, so she knows um, some of the streets, and we've drove some of those streets, some nicer than others. But like I said, I went and held an open house there, and was like, man, this place has really come a long way since the 80s and 90s. So I'm pro Rancho. It's a nice place. It ain't College Glen, man. College Glen is got its own feel. You know, family friendly community. I think we kind of bleed into East Sac that way, more than we bleed, towards Rancho and that area. But with all the cool stuff that Sac State has going on, man, we're in the middle of the hornet's nest over there, buddy.
I would say, I think College Glen is its own thing. 100%. I would say though, if you're looking for like the house styles, like that kind of stuff too, I think there's a little bit of everything in the College Glen. But one thing about you guys that I really, I've always loved about College Glen is that the community vibe there. Like, I think the community vibe in College Glen is just really cool. And I think a lot of people move to Sacramento and want that. They want the walkability, they want to know their neighbors, and they want the barbecues, 4th of July and everything too. And I really do love that area for that. I think, and location, you're central to pretty much everything, right? Especially on the 50.
Yeah, I'm gonna hop on 50. It's gonna take me, 12 minutes to get down to a Kings game, watch them win 40 games this year, and be the 9 seed and get knocked out in the friggin' play-in. Man, I'm already disappointed. The season hasn't even friggin' started yet. Um, but yeah, we're centrally located. I can go to Folsom when the Sacramento pediatrician office burns down. That's only a 15-minute drive, and yeah, so it's easy peasy getting around town from centralized CG.
There we go. If you guys are enjoying the broadcast, like smash that like button and the new hype button down below. I'd appreciate it. It's near the like button, I think. All right. Jesse says, just kidding. Probably best to pay off debt as soon as possible to really own. I do believe debt will be more difficult to pay with jobs going down. There's always good news, though. I mean, debt is literally, I agree with you. Pay off debt as soon as you can. Debt can just get away from you. Coming from a guy at college who got a Discover card and paid for his Havasu trip for spring break on it. Not a smart move. Not a smart move. So it is what it is. You learn.
We're all dumb, right? Like, I remember like I worked throughout college, so I had a job, but I still took max student loans every semester. Whatever they'd give me, I'd take. And then you get out and you're like, oh, like you're supposed to pay these things back?
Didn't
And,
know
and
that.
so you wake up 5 years later, you're like, 60,000 bucks is a lot of money. Like, where did that $60,000 go? And you're like, the mini fridge, I needed that. The big screen TV, I needed that. Cash Creek trips, probably needed that. A couple semesters in Mexico. It was a fun time, but yeah, you got to pay debt back, I guess.
That's how it works, man. That's how it works. All right, we got mind your money. Good evening. Looking to buy in Elk Grove. Do you think it's a good time to ask for 3 to 6 seller concession? I think it depends on the house. I think it depends on how needy the seller is to sell. I think if you go to the house and it's not staged, or if it is well, it basically is vacant. You know what I mean? Staging costs money, so that's probably a benefit as well too. If people are living in the house and there's no rush for them to leave, you're probably not going to get that concession, especially somewhere like in Elk Grove. But like I said, sometimes like the sellers have moved out, they got their new place, they don't want to carry 2 mortgages, and it could be a time to go. You just have to really, really kind of figure out exactly what the pain points are of the house and the seller. And if you can do that, and you have a realtor who really can do that well, then you could be in a good spot. But like I said, some people are sitting on 2.75. Some people live in their homes and they're like, you know what? If we sell it, great. If not, we're all good. You just really have to figure out what seller that is. Don't you think, Matt?
Oh, 100%. And like, this is a really good question, mind your money. So I like it because a lot of people are interested too. They're like, hey, is it the market where I can ask for some money off the price and I can ask for a concession? It depends. One house goes for sale. It's staged. It's beautiful. They remodeled it. It's a layout everybody likes. It's 1 block from the school. It's listed at 599. Stuff in the neighborhood sold for 6.25. Like, you can't ask for anything. Someone's going to pay
Yeah.
610 with no concessions. Then you go 4 blocks over. It backs up to commercial. It's been in the market for 67 days. They priced it $50,000 and they should have started. Like, that house, you're going to get a discount and you're going to get seller concessions. So it's like, it's so dependent on the house. One thing I will tell you, if you are a buyer, what you need to do is have a real estate agent and a mortgage broker that are knowledgeable and that work together. Because even more important than this question is like, what's a structure for this house purchase that makes sense for me? Because in either of those situations, you're going to, if you don't know any better, and if you're working with an agent, like, bless a lot of agents. A lot of them just aren't good. I'm just going to shoot
Yeah.
straight. I'm sorry. Like, the bar is low. Your Aunt Sally, did 4 hours of studying. She's a real estate agent. Her main passion is baking apple pie, but she sells one house every 18 months. So she holds the license. Sorry, Aunt Sally. Back to my story. So I miss these lives so much, Mark. This is so much friggin' fun.
I
So
know.
to my point, mind your money. Like, this is the $1 million advice. You are going to find a house you like, and you're going to talk to a great agent like Mark, and you're going to say, Mark, like, I know it's been in the market for 27 days. They've got it listed for 625. Like, what do you think I should offer? What's a good price? What can we do here? Mark, being a good agent, being an agent who's not afraid to pick up the phone and talk to the other agent, an agent who knows how to negotiate, an agent who's like seen sales in this area. They know that like the house that sold down the street for 590 was really like in poor condition. They know that the other one that sold for 650 had, 400 more square feet. Mark is going to get the information and is going to know that like this seller, like, wants to sell, but doesn't have to sell. So they want to net around 600,000, right? And like, the other agent might not say it, but they can dance around it. They can talk around it. So he's going to come back to you and he's going to say, hey, let's talk to Matt. Maybe you want to offer 600, but maybe you want to offer 610 with a $10,000 credit. With that $10,000 seller credit, Matt structures the mortgage where the first year is 4.99%. And then years 2 through 30 is 5.99%. And that buy down costs this much. The other 4,200 that you have in seller credit is going to offset some of your closing costs. You're going to bring less to close. Your payment the first year is going to be $380 less, versus just paying 600 and walking into that payment that's $380 more. So like, it's that kind of stuff that the right agent, the right broker, the right team, the right conversations. You structure a deal that makes sense for you. For you, that makes perfect sense. For the next buyer, they're like, I want the best price. I don't care
Yeah.
about monthly payment, right? And so they want to offer 600. For another buyer, they're like, I want to pay 620 and get 20,000 in credit. I want to do a 3-2-1 buy down where it's 3% lower in the first year. So like everybody's situation's different. The only way to like really maximize putting yourself in the best structure is to work with people that have done it. Unfortunately, like, although I talk bad about realtors, a lot of times it's not their fault. They're not bad intentioned. They just don't know what they don't know, right? And they've only sold 7 houses in the last 9 years. The agents that have sold 10, 15, 20 houses a year for a decade straight have some knowledge because they've done some things. You know, a guy who
Yeah.
structured 2,000 mortgages. I'm a public school kid. My wife doesn't think I'm that smart, and she's probably right. But I've structured a lot of mortgages, so I'm pretty darn good at it, right? So, yeah, that's my golden nugget of the night, Mark. I think that's where I should leave it. Speaking of wife, she probably is wondering where I'm at.
Are you heading out? We got all these questions coming in. Are you sure you want to bail out?
Let's do speed round. Let's get me out of here by 8:45. 8 minutes.
All right,
Fire
let's see what
whatever
we
you
can do.
want.
All right, zip code 95742. I was able to get a 2850 square foot, 3-car garage, 5-bedroom, 3-bath, huge lot or decent lot, or loft. Sorry, huge loft, decent. My vision. 719 3.99 7-year arm, seller covered all closing costs and gave $40K. That is a smoking deal. Good job, Sam. I love when I hear stuff like that.
Sam was saying he backed up to Anatolia, right? He bought there.
Yeah, good for you, man. Those houses
Yeah,
are worth some money back there too. Wendy says, gives us 3 hearts. Wendy, you are amazing. So thank you for working with us, by the way. Our Jesse says, do you see more opportunities with homes going into foreclosure, or do you foreshadow a continuation of the strong economy?
I think that like the economy is not strong by most measures. You know, and but that doesn't mean that we're going to see mass foreclosures. Um, a dream of like mass foreclosures, flooding the market, prices going down by 30-40%. Like you can bet on long shots, but that's like the Cowboys winning 3 straight Super Bowls. Sorry for Dallas fans. They get the brunt of a lot of jokes, but like you got no shot.
All
It
right.
wasn't even one Super Bowl. It's such a long shot. It's 3 straight. 3 straight Super Bowls.
All right, we got some more. Gold River is a lot of elderly at this point. Some of these areas, inventory depends on. Wait, hold on. What just happened? All right, Gold
Sorry.
River. Now,
They
here's
had
what
a
I will
good
tell you
time.
about Gold River. I will say less about that, and I will say more about Gold River is you have a lot of original owners that bought in the 80s, but there is always a cycle in every single neighborhood. But for me, I look at it this way, especially in Gold River. A lot of people stayed in their homes. A lot of people move around Gold River because it's such a kind of a nice place to live. Like, I honestly, they made bank in appreciation of their homes. I think, like I said, in an area like Gold River, you're going to see a lot of these people who are like maybe, you know, the kids already went to college, they're done, and they have this big 30,000 square foot house and they're moving out. So, Wendy, I'll say if you're still listening, anything can happen here in Gold River, man. Anything. All right. Devin says, great show. What do you both think will happen in the next decade? Will Sacramento and the area expand at super high levels, average levels of low levels in terms of new people moving here? What do you think, Matt?
I think more people move here. I think Sacramento is a great place to live. And like when you think about the surrounding NorCal areas, you know, like everybody thinks about, you know, just the Bay Area, but there's a lot of higher price markets surrounding us. Sacramento is still a place where like you can buy a $500,000 home and hour and a half to the mountains, 2 hours to the beach. Like that is, you know, that video I made that went viral, that by the way has 1 million views now, about like people who have moved away and then figured like, oh my gosh, Sacramento or not like California as a whole is a great place to live. Like that's not going away. So I think, you know, I thought your question was going towards like home price appreciation, which I think is slower than historical averages, but still up. You know, if we fast forward a decade, you know, we might not see 60%, which like the average over the last 40 years is 5.9% per year, like California as a whole. like maybe over the next decade, California as a whole is only seeing 3 to 4% appreciation on a yearly basis. But um, like more people moving to Sacramento, I think for sure. And like, you know,
Yeah.
me and Mark are a couple of dudes on YouTube. If you want to like think about the smarter people with literally like teams of analysts, they're building a lot of homes. And those people
Yeah.
got a lot of money invested, betting that people are going to buy them. People are going to want to live in those places. So like mass building in Folsom and Rancho and like all areas of Sacramento is probably a good sign that there's going to be some people that want to live here.
For me, I think Sacramento's location's always been ideal. I think right now, if you look at California, you want a brand new home, fantastic location, all this medical being built, all these schools being built, all this infrastructure somewhat starting. We need more. I think Sacramento is a good bet as far as California lifestyle, as far as affordability. I think Sacramento is a fantastic position right now to actually do really, really well in the future. I think with surf parks, Top Golf, new restaurants coming here every single day, I think we're in such a good position. Now, the other thing too that a lot of people hate, but I think it's also something that we really got going for us, the new homes and mellow roofs. Everyone's chipping in for the most part, whether they like it or not, to put up new police departments, fire departments, schools, parks, and everything too. We have these cookie cutter, amazing communities that you can go to a soccer game, go to the park, go for walks, and enjoy lifestyle. We have areas where you can buy a California home in Rancho for like $500,000 and be right next to a park. You can go to soccer games and everything too. So for me, I think Sacramento is going to go and go and go. I mean, where else in California can you buy a brand new home? You can buy a resale home. You can get some of the most amazing Northern California landscape, and you have new employers coming in. You got such medical, you got state jobs. So for me, I just see it as a great spot. I will tell you this. If Sacramento doesn't do amazing within the next like 10 years, I think the entire United States probably has done horribly, because I think we are at the tip. I think if there's a spot that's going to be exploding, it's us. I mean, Redfin had us as the #1 spot people are looking to move into or examining. I think the future is bright for Sacramento. I always have. That's one of the reasons why I love this YouTube channel so much. And that's why right now I'm going to be booting Matt Gouget off, because his wife is going to get mad at me if I don't. So Matt, man, thank you for joining up. We're going to keep going.
Man, this was so much friggin' fun, dude. I gotta be back soon. Even if I don't go back to doing lives on my channel, which I think I will, I have to. So much friggin' fun. You got to invite me back, dude. We got to do like a
100%.
Do it earlier. I'm getting old, bro. This is like past my bedtime.
This is when everyone is chilling. They just finished dinner. They're enjoying it a little bit. It's good. All right, Matt, you're gone. Say hi to the wife.
All right. I appreciate you. Thanks. Matt the Mortgage Guy.
Oop. I cut him off early. Sorry about that, Matt. Didn't mean to. I thought you were all right. So like I said, for me, I've always believed Sacramento is a great spot. I mean, I think the idea that we have all these new homes sprouting up, all these communities developing overnight. I think areas like Bickford, West Roseville, West Sacramento, I think we're just growing and expanding through all sorts of different areas. So for me, I like Sacramento. I think it's a great spot. And I look at it, say to myself, who's Sacramento for? I think it's for someone who loves California, loves the lifestyle, loves the weather. Yes, we got our hot times during the summer, and public transportation we definitely need to work on. But as far as other locations and what they have and the pros and cons, I'll take our chances. I don't remember tornado. I don't remember hurricane. And I definitely have not felt an earthquake since I've been here. So for me, I like it. Community values. I know my neighbors. We do the 4th of July thing. We can get a bigger house here. We can get a little room to breathe. So for me, Sacramento, I think it's just going to keep going and going and going. I don't see something that's looming over Sacramento. I think we have been always the value add to the Bay Area, places like LA. So I think that our potential is really, really good. And so, like I said, there's no guarantees, but for me, I'm here for a reason, guys. I'm definitely here just like you guys, investing in Sacramento, living in Sacramento. So I do really believe like in the Sacramento area myself. All right. All about who grabs it by the horns and figures out how to tame it. I agree. If you guys are looking to buy, if you're looking to sell, if you're looking to do whatever, you got to jump eventually, but don't do it because of the market. Don't do it because you're trying to time the market. Just time your life. I mean, like I said, I was doing this Instagram video. It was so clear when I was doing this video. It was like, you're going to know when the time is right for you. It just is, and it's just going to be like, you have a kid, you got money in the bank, job security is good, and you're just waiting for that. You're thinking about just taking it to the next level because you're in a position to do so. My biggest opinion or my biggest idea for people who we work with is don't bite off too much that you can't chew. Figure out what that mortgage rate looks like. Don't get so caught up in like how much the price of the house is, right? Look at more about like your mortgage payment. Because for me, that's what I would do if I'm looking to buy. I would say like I'm sticking at $5,000. What does that get me? New home, resale, and everything too. So that would just be me. That'd be my word of advice for the night. All right, but you got my SAC growth forecast. Major shifts are happening in immigration policy. Sacramento's growth past 5 years has been entirely from international migration. Absent that, net pop decreased from now on. I'm going to tell you something. I moved in a lot of people from the Bay, a lot of people from LA. I've moved some people internationally. I've moved people in from everywhere: Vegas, Portland, East Coast, everywhere. A lot of people just understand that they want California. They want the California lifestyle. They don't want to pay $2 million for a 600 square foot condo in the Bay Area. They want something nice. They want to be some of this amazing scenery, and they want to be in California. Those are the people that we're moving in. And I think that that's going to continue. I just don't see it. And also, I was talking to a really nice guy too, and he was talking about Mountain House, because I was always like, man, a lot of people are moving to Mountain House. And he was like, the winds in Mountain House are absolutely a nightmare. And he wished he would have chosen Sacramento. We're trying to get him into Sacramento. All right. Thanks for providing all this value, gentlemen. You're definitely gaining the support. Awesome. We appreciate that. And, thank you guys for tuning in. And I maybe don't say this enough, but I appreciate your guys' time. I appreciate you guys tuning in and the support of this channel. Now, I got a couple calls from people who are basically saying to me, hey, I wish you'd do this, or I wish you'd do that. I'm trying to always improve on my craft as far as being here for you guys and giving you guys a good show, giving you information. If there's anything that I'm missing, anything that I'm doing, anything at all, like I love criticism because it's how I improve. I want to improve for you guys to give you the best show, the best videos possible. So critique, give me the feedback. I will improve and I will do better, because I don't believe in doing something and being stagnant. I always want to get better at stuff. All right. Boom, boom. Yeah, the time on this is great. Cool. There are some projections out there that rates will drop back in the 3s and possibly lower if an unemployment-driven recession. Do you think the values would hold up in such a situation? I don't think so. I don't think we're going to get to 3s. I think we're lucky if we're going to get to 5s or low 5s. I just don't see it happening. Like I said, I think for me, I think tomorrow, and this is just my own 2 cents, take it for what it's worth. I think tomorrow we're going to see interest rates kind of start aiming towards 6.5 again. I think that, based on bond market, I mean, the bond reaction to Jerome Powell, I mean, I just think that tomorrow you're going to see interest rates kind of start creeping up, and I hope it doesn't. I would love, in a perfect world for you guys out there, I would love to see interest rates drop into 5s. I'd love to see some primo inventory hit the market, and I'd love buyers to get amazing deals and sellers to be able to sell their homes. I would love that, but it just isn't the world we live in. And I think today, for me at least, was a little bit like much to do about nothing. And I do think, though, the next couple days, I would say stay tuned to see where interest rates are headed, because I think it could be a cold winter. Hopefully not, but you never know. You never know. That's why the real estate market is so crazy. All right. I was talking about taming AI when you guys were talking about it earlier. Oh, okay. Yeah, sorry about that. Sometimes all about who grabs it by the horns and figures out how to tame it. AI. I'll say this. AI is an interesting one. For me, as far as being in real estate, realtors in general just jump onto this stuff, like AI, like Zillow leads, like all this stuff too. It's just a tough one. It's a tough one when you see your competition grabbing AI and doing this stuff. You decide, is it something I should get into? I mean, you do it, but you also realize that there's just something really, really inherently wrong with it. But you also see its benefits and everything too. So I think everyone's going to have their different opinion about AI. I know realtors are touting it, and there's a lot of mortgage brokers that are double downing in AI. I just think for the most part, AI is going to be one of those things that a lot of people are probably going to be out of work because of it. And it just makes me very, very nervous, but that's just how I am. Like I said, everyone's different. All right. I know the central bank rate changes don't directly affect mortgage rates, but what is the relationship? Why do people say that rates do affect it? Don't directly affect. So, okay. So hopefully hopefully I get this right as well too. Matt jumped off, but what normally happens is, like, especially with like when the Fed is making an announcement, their rate is a direct kind of like it's basically an indicator on how they believe the economy is doing. Today for me showed that the Fed was basically saying we're not gonna, the economy is doing great and we're doing fantastic, which in relation to a lot of investors who are buying bonds, they didn't like to hear that. And as Jerome Powell was out there talking a little dovish about the market, what I noticed and what Matt noticed as well too is that, mortgage interest rates for the first time in like a few days started to creep up. So I do think right now what you're going to see is that it is all about the bond market right now and how the bond market is going to react to, Jerome Powell's dovish kind of, forecast or, rate drop today. And if they really believe there's going to be additional ones happening in the market, and if they should buy bonds or not. And so for me, I was talking to kind of Matt offline, and I was talking to him like, did the rates drop because a lot of people were buying bonds? And he's like, we were talking about it. And yeah, I mean, people were anticipating that it was going to be a little bit more of a reduction today, Fed rate. And if that would have happened, I think what we would have seen is a lot of bond investors probably would have continued to buy bonds and mortgage rates could have dropped further, but it just didn't happen. Like I said, we're going to see. And like I said, hopefully mortgage rates continue. Maybe it's just a blip and tomorrow we start seeing mortgage rates go down again. But I'm looking at it based on like, basically based on the announcement of the Fed. I just don't see it. But like I said, I hope it does. I hope prices go down. I hope interest rates go down. I hope the market gets better for people. I don't know what to expect for the end of the year. I just think it's going to be a colder end of the year than people anticipated. I think if you're thinking about buying a home in the Sacramento area, where you might get a really good break right now is in new homes. I think new homes are offering great incentives, great communities, and they're building like crazy. I just don't know. And I don't have too high hopes for the resale market. All right. Immigration doesn't seem to be changing around my area. I'm in the Central Valley, and I've seen a lot of migrants at motels and in stores, backpacks stealing. This is a super common San Jose where I go thrifting. They go open packages and putting the items there in backpacks. They don't speak. Yeah, I mean, like I said, for me, here's the thing. This isn't about politics. This isn't about like, any of that stuff. It's mainly about real estate. And for me, as far as today goes, it just wasn't what I expected. I don't think it was what a lot of people expected. And yes, the Fed rate is different than the mortgage interest rates, but I do think that tomorrow and the next day, I think mortgage rates might be spiking up towards 6.5. Hopefully they don't. But like I said, again, you'll never know. And we'll find out tomorrow together. All right, let's get into some more of these questions and then we are done for the evening. Who is looking forward to moving to Sacramento area in 2026? Yes, no, not sure yet. I would say here, this is my main thing about like moving into Sacramento if you want to or if you don't want to. I would say get your education piece down. Come to Sacramento, see some houses, see some places and everything too. Figure out if Sacramento is right for you. For me, as someone who came in from the Bay Area, I just honestly thought of Sacramento as a place I stopped in and out when I was going snowboarding. For me, when I started discovering Sacramento, I realized one is I needed to put in a lot of work to figure out the different locations, the areas, price points, schools, like fun things to do and everything too. I'd say you need at least maybe a couple months of that. But I would say right now, while we kind of figure out, where you figure out the inventory levels and like stuff that's, while you wait for the houses that you really, really like, figure out what the houses like, figure out communities, areas, streets, schools, places to eat, things to do. Figure out exactly where you want to be in Sacramento, figure out the community you like, figure out floor plans, price points. That would be my biggest thing to anyone who's looking to move into the area. All right. Ben, yeah, I totally agree with you. Sacramento's a hot spot. A couple hours to the ocean, ski slopes, Tahoe, quick trip to the hill. Some of the best swimming rivers in the state up in the Sierra. Yeah, I mean, guys, we have it really good here in Sacramento. A lot of people are like, yeah, the weather gets hot during summertime. But I mean, I've talked to people in like Texas and they're freaking out because, what is it? Tornadoes, hurricanes, rain, flooding, all that stuff too. We don't have that stuff here, guys. No tornadoes, no hurricanes, flooding. We do get rain, but nothing to the level of other areas. Earthquakes as well too, comparatively towards the Bay Area. I haven't felt one since I've been here. So I love the Sacramento area. As far as heat goes, yeah, during the summertime, it does get warm. In fact, today it's like in the 90s. It's not fun, but at the same time, for me, I mean, if that's the worst it gets, I mean, if that's the pain point, if that's the thing that is really bad about Sacramento, I'll take it over any other spot in the United States. So I like it here. All right. Dude, thank you for letting us know that the deal I got is a good one. I've been stressed out. First time home buyer getting in the 719 home. You know what? Here's the thing for me. I think based on what you said, you got yourself a good deal. I think also it always is going to come down to if you can handle the payment. I think that's the main thing that people kind of forget. You know, like a deal it could be the best deal in the world, but if you can't afford it, if it's not for you, if it's not the location, I mean, it's just, you know, you're the person who bought it. Yeah, you got a deal, but it might not be for you. Worry about the payment, worry about paying off the house, worry about money in the bank, worry about job security, all that kind of stuff is more of a factor, and worry about the mortgage payment if it doesn't stress you out at 2 in the morning. If all those things go, I think Sacramento, like I said, for me, Sacramento is a great spot. I think our future growth, future development, and I always tell this to people, I'm like, if Sacramento, based on what I've seen during the course of this year, where we were the #1 looked at place in Redfin, and now we're kind of, you know, it's slow. Like I said, summer was slow, spring was slow. I think we're a great port in the storm for what's ahead coming to the real estate market. Do I think at the end of this year it's going to be a little slower? Yeah, I think it is. I think it's going to be a slow, cold winter. But I think springtime, I'm very optimistic for it. And I think you guys should be too. We live in a fantastic spot. I don't care what anyone says about Sacramento. I don't care about all that stuff. Like, I love the Sacramento area. The house I got here in Sacramento, the community, the people here. I love being in on the ground floor, something pretty amazing. And all those things to me are Sacramento. And those are the things I talk about on this live show. Those are the things I talk about when people call me as well too. Guys, we are very, very lucky to be here in Sacramento. Some people like me bought maybe 5 or 6 years ago and they saw some good appreciation, got some good rates. But at the same time, I think we're going to go through some more growth spurts as well too. And I think Sacramento is going to be one of those spots where right now, a lot of people are like, is Sacramento affordable? I don't know if it is. I think in a few years from now, I mean, I don't think we will be affordable in any way, shape, or form. So be glad you're here now. All right. I believe the 63% that voted no that actually already are actually already here. And his conviction said, we're full. I encourage all good company to come join us. Yeah, and I'm with you. Like I said, and I'm sorry about butchering your comment too. That was on me. Later in the day, my eyes get a little blurry, so I apologize. But yeah, I would say this. Sacramento's great. And imagine it like this. You know what I mean? Like we're all in here having a fun time. It's a good place, Sacramento. Like for me, community vibe, the people, what you can get here, the nature, fun things to do, the food scene. For me, Sacramento is amazing. Now, I would say though, if you are skeptical, if you're saying, I don't know about Sacramento, of course, these people are going to tell me it's great. They live here. I would say come out here and figure it out for yourself. I can plan an amazing tour for you, show you some good restaurants, some places to go and look. I've done it for so many people, and I kid you not, the second they're leaving to go home, they're looking for houses in the Sacramento area. So for me, Sacramento is a gold mine here, guys. And I'm not saying this just as a realtor. I'm saying this as a Sacramento enthusiast. It's almost like I struck gold on the hill and I'm telling everyone, guys, please come out here and just check this out. Now, I would say after you check it out, if it's not for you, no harm, no foul. But I would say more than not, I bring people out to Sacramento. I show them, I figure out their lifestyle, what they like. They come out to Sacramento, and by the time they're going home, they're so full of options. It's like not even funny. So I would say give it a shot. I'm sure you will not regret it. All right. Boom. How long have you been in the Sacramento area? Whew, seems like forever. What is it? About 16 years, before that, Marin County. And then I came up here, typical story. Boy meets girl. Girl lives in Sacramento. Boy never thinks he will move to Sacramento. Goes up to Sacramento and discovers that he made the best 2 decisions of his entire life. So for me, like I said, Sacramento is a game changer for me. I wouldn't want to be here. I wouldn't want to be anywhere else. I think we're on to something really, really good. And I always say this on my channel. I'll tell you something. And this is the funniest thing. I remember back in the day when I lived in the Bay, I was in Candlestick, and the Giants, San Francisco Giants, were horrible. We were not great. But I was there diehard with my friends, candlesticks, freezing, watching the Giants game. Now, they're like what, Sutter Park or Pac Bell Park, whatever they're at. And now it's like, everyone's getting dressed up, going to the park, McCovey Cove and everything too. I think we're right now, the Giants at Candlestick. I think right now that this is the time that for all the Sacramento diehards, like we're eventually going to get that payoff. And I think we're kind of already there, honestly, because I look at Sacramento right now and I look at the food scene, I look at the people, I look at these amazing houses that are out there, and I'm like, we're pretty much living large, but I think we got way more room to go. And I think when areas like that surf park in Roseville come about, Top Golf downtown comes about, the Connector Project keeps doing its thing, electric pickleball in Roseville. I think we have so many things sprouting up in the Sacramento area that we have another big growth spurt coming. So I'm like I said, I'm excited. What's the most dangerous area in Sacramento? Oof, I don't know. I mean, truthfully speaking, I think here's where it comes into like where it gets a little bit confusing. Dangerous is very, very subjective. And that's one of those things as realtors, like, it's just hard. Like, for example, schools. Everyone always asks me, good schools. I'm like, what are good schools to you? So I'd say, like, if you want to know about areas and you want to tell me exactly what that is, we can definitely talk about it in a little bit, like point you in the right direction, everything too. It's just that, like, it's just very subjective. To you, you might say, like, this is for me is dangerous. To someone else, they're like, that's not that big of a deal. So it's kind of subjective. And I know that's kind of tap dancing, but I've talked to certain clients about it, and I figured out that it's such a subjective kind of thing. Like, for example, if someone says, this is a good neighborhood, oof, subjective. Some people, it's a fantastic neighborhood. Some people it's not. And so I think for a definition like that, we probably have to talk over the phone a little bit and figure out exactly what you want to stay away from, what you like, what you don't like, and then kind of form you a little bit of an idea on that. Hopefully that helped. All right, boom. I'm fortunate enough to be able to afford a payment. I got a 3.99 rate, but my 7-year ARM piece of it makes me nervous. I'm hoping it appreciates enough for me to sell it and move before the 7 years. For the price point you paid, for what you described, I think you're it depends on the finishes inside and everything too. But I will tell you something, like, I think for what you said to me, if the finishes are nice inside, and like you said, the backyard area, you said the lot size is good, I think you're sitting on something pretty good. Great analogy, Mark. Thank you. I appreciate it. I try my best. And like I said, when we get to past the 2-hour mark, it gets a little bit tiring. And like I said, I feel like Rocky in the 10th round, kind of battling out with Apollo Creed, but I try my best, and hopefully you guys appreciate that, because I try my best. And towards this, like 1.5, after about an hour and a half to 2 hours, I get a little bit like, a little tired about sometimes. So I'm not as articulate as I was at the beginning of the broadcast, but hopefully you guys understand that the beautiful thing about these live broadcasts is that there's no smoke and mirrors. There's no jump cuts. There's no like doing it 3 times to get the perfect thing right. This is all about being real with you guys, talking real estate with you guys, getting your questions, fielding them the best I can. And I think there's something to be said about the authenticity of the live show. So hopefully you guys like it. All right. For those of you who decide to move to Sacramento, make sure to choose the right neighborhood, as our first time here was a bust. Now our second time around, it's been great. Yeah, and that's another thing too, guys. I mean, do the research on areas, communities, and neighborhoods. One of the things I've seen, and one of the biggest mistakes people make, is like, let's say you're someone from the Bay Area and you see this amazingly gorgeous house. You're so drawn to the house, you don't really focus on the community, the neighborhood, stores, shopping, all the other little things that, like, for you are very, very important. So like, yeah, you're going to find an amazing house almost anywhere in the Sacramento area. But the other thing is, understand this, eventually the house, how can I say this? Eventually the house is going to be somewhere you're going to leave. And you want the same kind of flow, the lifestyle, the community. You want the certain amount of like what you're looking for outside the house, if that makes any sense. You want if you're a foodie, you want to be close to the food scene. If you're someone who likes mountain biking, you want to make sure there's trails are close by. If you're in a community where you say, I have an amazing house here, you want to make sure that you're in a community of amazing houses so that your appreciation keeps going. So there are a lot of things to factor in, but a lot of people, when I show them these houses, they're like, oh my God, that is so amazing. See the house, see the area, take your time checking out areas, go there at 9 o'clock in the morning, 5 o'clock at night. What's the weekend traffic like? Go to events, go to school events. and kind of make an educated choice. The worst thing for you is to actually pull the trigger on a house you see on Zillow. You love the house, you don't know the area. Take your time to get to know the area. Trust me, at the end of the day, it will be something in the long run that really, really pays off, because everyone knows moving is not fun. Joe was, oh, bust. Joe, why was it a bust? My guess probably because, sometimes I was working with these one clients and they bought, and this is before we were their second team after their first move, but they bought into Citrus Heights, and then they discovered like East Sacramento, and they just figured out like East Sacramento, was such a better fit for them than Citrus Heights. And, just do the research and find it. Like I always talk to everyone. And if you guys call me and you're working with my team, you're going to realize that I do talk a lot about the education piece of this. I'm never going to be that realtor who's going to say, you saw a house, let's go see it. That's a house for you. I'm more about, I want to make sure that you get educated on the area and figure out exactly where that spot is for you. And then we worry about the floor plan, the house, and everything too. We don't sell, we basically educate. And I think you really, really need a team of realtors that kind of do that for you. A team of like a realtor or a team of realtors that is focused in on that. What you're going to notice with us for the most part is our clients stay in their homes for a long time. They don't really sell their homes. They're happy with what they bought because of this piece of the puzzle that we like to, the education piece of it, figuring it out, going to Rockland, going to Folsom. Most realtors, that's a long drive. We're like, you have to do it. We want to make sure you find the right house. Even for Wendy, who's on the broadcast, we've worked with her to try to find her perfect home. And it's been like, I think 6-7 months. We wouldn't want it any other way, because when she gets the house that she wants and loves, she's going to stay in that house. And I think at the end of the day, there's something to be said about that. Instead of just focusing on the check, it's more about the relationship. It's more about the trust. It's more about the idea of spending the time on educating someone on areas, because Sacramento can be so overwhelming and there's so many little pockets you might overlook. So for me, guys, for me, if I move somewhere, I'd want someone to take the time educating me, going the pros and cons. And then at the end of the day, talking floor plans, single story versus 2-story, size of the lot, the area, the comps, price per square foot. I think it's a process, but I also think that people should spend more time on a house and figuring out if a house is right for them, as opposed to maybe taking a year to buy a big screen TV. So for us, we like to focus on education. We like to make sure that you know the entire area. And if you'll notice, and you guys, a lot of people out there watching the show have worked with us, you'll find that you guys aren't moving, because, that education piece is such a piece of how we work. All right, guys, we're 2 hours. I appreciate you guys tuning into the show. I really do. If you guys can, smash that like button. Also, if you can, test out that hype button down below. So kind of buy the like button as well, too. I'd love to see what it does. Thank you, Matt Gouget, for coming on board. He's going to put a link to his channel as well. Guys, thank you for tuning in. I appreciate it. I am done for the evening. Now, 7 o'clock on Friday, I'm going to drop a video. It's either going to be a luxury home tour in Cadavadera or in Verdera, or it's going to be me going back to back to back to the 4, the most expensive luxury homes in the area. I'm also going to be doing a Bickford breakdown, but I'll put in the polls tomorrow. You guys select which video we see on Friday. See ya. Okay, guys, hopefully you enjoyed the show. If you did, please smash that like button. Also, there is a new button down below called the hype button. If you could hit that hype button, it would mean a lot to me and the YouTube algorithm. Also, I want to know what you think in the comments below. Do you think rates are going to continue to drop? Do you think home prices are going to drop? What do you think about this winter? What's it going to be like here in the Sacramento real estate market? Now, guys, we are a team in the area, a real estate team, and we'd love to work with you. If you're thinking about making the move to Sacramento, or you're thinking about making the move around Sacramento, we'd love to talk to you a little bit about that, answer any questions you have, pros and cons, and plan some amazing tours for you so you can get educated about the area, make the right decision in purchasing a house. Like I said, there's a lot of different areas in Sacramento. You definitely need to get educated about the pros and cons on each one. Now, if you are thinking about selling your home and you are either in Sacramento, Lake Tahoe, or the Bay Area, we've sold 10 homes with YouTube videos. Our marketing is second to none. We'll get more eyeballs on your home than any other team in the area, and we'd love the opportunity to show you some of our marketing statistics. So hit that Zoom link below, get on our schedule, and we can show you a little bit about why you should not be listing your house with any other team in the area. One last thing before I go, there's a playlist right over there of other videos I've done. These videos, guys, are videos I've done over the last 6 to 7 years about the Sacramento area. They will give you a breakdown about all of Sacramento and get you that education you need. They're right over there. And guys, until the next video, I'll be dropping it Friday at 7 p.m. and I'll see you next week at the live show, Wednesday, 7 p.m. Bring your questions. This is Mark. Have a good one.